Dow closes 570 points lower, turns negative for 2023 as Powell ignites higher rate fears. And if you've been following this channel, you know I've been saying the same thing all along. The Fed hasn't really changed their language, right? They said, hey, we're going to be raising rates. It's going to be higher and longer than anyone expect. For whatever reason, the market hasn't believed it, but maybe starting today, the market's starting to sort of fall in line with what the Fed is saying. So, U.S. stocks fall after Powell's hawkish comments, right? Fed chair says more aggressive action could be required if economy grows too quickly. The more headlines, Jay Powell warns Fed is prepared to return to bigger interest rate rises. And sort of what the name of the game is right now is, oh my God, are we talking about 50 basis points again? What about 75? Why not 100, right? I mean, the discussion is starting to really change. Fed chair opens door to faster rate moves and higher peak, right? So now we're looking at bigger rate hikes and maybe even higher than people had expected. Fed Chair Powell says interest rates are likely to be higher than previously anticipated. And we have Fed Powell sees a higher peak for interest rates, says Fed prepared to speed up if needed. And we can dive into some of the language. We'll look at this together. The latest economic data have come in stronger than expected. Now, remember, the basic gist of it is we need to basically cool off the economy. So the numbers coming on the economy are stronger than they had expected, right? Would suggest that the ultimate level of interest rates is likely to be higher than previously anticipated, right? So we all know they're going to raise rates, but they're going to probably have to do it higher than sort of, what the market and other people thought it was going to be. And I continue to say, if the totality of the data were to indicate that faster tightening is warranted, we would be prepared to increase the pace of rate hikes. And again, this is a pretty hawkish language saying, hey, we're going to raise even more than people think. And, if faster tightening is warranted, so be it, right? More language here. We're looking at a reversal, really, of what we thought we were seeing to some extent. Wait, what? Read that again. We're looking at a reversal, right? So kind of a flip, reversal, really, what we thought we were seeing to some extent. So things may be not quite going the way that thought. And essentially, inflation is just tough to fight, right? I'm just being honest with you guys. It's tough on Tuesday. So nothing about the day suggests to me that we've tightened too much. So, and there was another quote recently too. It was like another Fed person. I was saying, that there's more of a risk that we under tighten than risk that we over tighten. Basically, we better raise rates more because if we don't raise rates enough, that carries more risk, right? So we're all talking about raising rates. Now there was a little bit of I guess political drama, I will call it, between Elizabeth Warren and Federal Chair Jerome Powell. Now, full disclosure, I like Elizabeth Warren. I've met Elizabeth Warren. However, she's a politician like every politician who has a statement to make. They're playing politics. So in a way, she's playing dumb. I'm being honest with you guys. This is just how it is. And the whole name of the game is blame the other person. You don't want anyone to blame you. That's it. That's for any politician out there, blame the other person. So the headline, and you'll understand this as we go through it. Elizabeth Warren asked Federal Chair Powell to speak directly to the people. He's planning to get fired over the next year by continuing to raise rate hikes. And basically the gist of it is as interest rates go up, it'll put a lot of pressure on a lot of companies, and most likely we'll see unemployment go up, as I've mentioned to you guys before. The numbers are for every percentage point that unemployment goes up, you'll have 2 million Americans will lose their jobs, and we kind of go over this. And so this is sort of like a gotcha kind of stuff that she's trying to do. And again, it's all playing politics. Every politician does it. So Chair Powell, if you could speak directly to the 2 million hardworking people who have decent jobs today, who you're planning to get fired over the next year, what would you say to them? So that's a very, very aggressive question, right? So Powell, you're going to get all these people fired. What are you going to say? How would you explain your view that they need to lose their jobs? And I wouldn't want to have to answer that question. And this is the reality. So the Republicans, they're going to want to paint all the Democrats as saying, oh, look at the Democrats are in power. Inflation is too high. It's all their fault, right? And if you're the Democrats, say, oh my God, okay, what do we do? Inflation's tough, right? Interest rates are going up and we're in power. So who do we blame? You got to blame the Fed, because you can't really blame the Republicans, right? That's not going to work. And the truth is, it's just the truth, guys. Both parties, we've kept interest rates low for such a long time. We've been printing money for such a long time. And you know, you can only do this for so long. And I understand if you just got in the market recently and you've only used to the market going up, you think that's normal. And if you guys remember, so it's just recent history, Trump used to like to really brag about, hey, you know, the stock market's doing really great because when I'm president, the stock market's awesome. But the problem is like, you know, if you overheat the economy, overheat the stock market, you know, things need to cool off a bit. And that's sort of what we're seeing here. Or be it, for example, you saw a lot of tech companies that were over hiring. So there's no easy way to put it, is that unfortunately people will probably get laid off because things are slowing. And I've mentioned that several times on this channel, and that's why we talk about jobs and networking and being prepared for this kind of stuff. So, you know, we kind of all know it's going to happen, but no one wants to take the blame for it. And this is sort of what politicians do. It's you know, it is what it is. And this is Powell's answer here. Powell responded that he would, quote, explain to the people more broadly that inflation is extremely high and it's hurting the working people in this country badly. All of them, not just 2 million of them, but all of them are suffering under high inflation, and we are taking the only measures we have to bring inflation down. And moreover, will working people be better off if we just walk away from our jobs and inflation remains 5 or 6%? And that's a good point, right? It's the longer that inflation, you know, stays high, say food goes up, energy goes up, that really, really, really hurts people at the bottom. And also too, this is very real. When interest rates go up, if you have a ton of capital and you just throw a bunch of money in the bank, like you're making money on that stuff. If you're in the reverse, if you have a lot of debt and interest rates are going up, you're like losing more. So the way this game is played, and unfortunately, right, higher interest rates will benefit rich people. Basically, if you have a ton of cash and you know, all of your assets are going up in value, and then if you're in the negative, your debt is going like bigger, bigger, and bigger, right? So you're kind of moving opposite directions. And I've mentioned this before, when the last time we saw this sort of high inflation, high employment, this kind of stuff, it would be like the 80s. And if you go back to this time, if you guys have lived through this stuff, there are a lot of like gangster movies and gang movies and drug movies and this kind of stuff. That's just, I expect, and this is just, you know, my opinion. I don't know for sure the future, but if unemployment gets to like crazy levels, I would expect, you know, crime rate to go up, this kind of stuff. But we'll see. You know, we don't know if we can keep, you know, raise interest rates up to a certain level, keep inflation down, and kind of keep unemployment at a reasonable level. You know, maybe things will be okay. I think we're in the 3% range, something like that lately. But it probably needs to be more like 4 to 5. But you know, we'll see where it ends up being. Chair Powell, you are gambling with people's lives. This is coming from Elizabeth Warren. You claim the idea that there's only one solution: lay off millions of workers. We need a Fed that will fight for families. And if you're not going to lead the charge, we need someone at the Fed who will. So she's kind of calling for a federal Jerome Powell's firing. But again, I think this is just plain politics. Whoever is in there, I think probably would do the same policy. And this is also something that's very important as well, be it for a Democrat or Republican. If, like, say, for example, Donald Trump says, hey, you know, Fed, keep interest rates low because I want to, you know, a stock market that goes awesome. The Fed shouldn't do that either. The Fed should be neutral in the same way that the Democrats, like, you know, Elizabeth Warren's like, hey, you should keep interest rates low because we don't want people to lose their jobs, but then inflation gets high, right? We don't really want the Fed to be political. Fed is political, but it really shouldn't be. It should be, you know, looking at data and managing it separately. But this is how it is. This is how the game is played, right? It shouldn't be political, but it is. You know, you can take a look at this. This is another headline. Americans' outline for personal finances is getting gloomier. This was I think it was Freddie Mac thing, or Fannie Mae, sorry. And basically are asking people, like, what do you think about your situation is? And it dropped down to around 30%-ish that think that, you know, the next 12 months will be better. So it says shares respondents who expect their personal financial situation to get better in the next 12 months, right? So only like a third of people think things are going to be better in the next 12 months. So that would be, you know, 70% thinks that things get worse for their own personal financial situation in the next 12 months. And then when they ask people, like, the share of employed respondents who said they're concerned about losing their jobs, and I think this was this in the next, it didn't say, that just, I guess it's just concerned about losing jobs, is at 24%. So a quarter of people are worried about their job security. The yields, the Treasury, was it the 2 years over 5? That's the first time since 2007. You guys can see the rates. So the 12-month is at 5.18, 6-month is at 5.14, and then the 10 years at 3.97. So it's a lot of downward pressure for stocks when you can just like, hey, you know what, I'm just gonna, 6 months, 5%, no risk. Why would you risk money in the markets? The other thing too that it was interesting when he started commenting, that was the headlines here. U.S. stocks fall after Powell's hawkish comments. The dollar started going up, and this is sort of right when the speech was made. And I had noticed as well. You guys know we're in Korea, so I tracked the dollar and the won, and the dollar has been really volatile actually. I mean, the currency usually doesn't move that much. It not like this. So I don't know where the dollar is going to end up being. But it has been going up. And the other thing too is interesting for those of you who are Canadian viewers, because we do have a lot of people coming here from Canada. So evidently, from what I read, and I don't know, I'm not Canadian, I don't follow Canada as closely as say the U.S. They're saying that Bank of Canada has been signaling that they're not going to raise rates anymore, and that they've kind of topped out, and then hence the Canadian dollar has been weakening. So if that is what you guys have been hearing, please share in the comments what the Canadian Central Bank is doing. That's just what I read, that they've been signaling that they're not raising rates more, which doesn't really make sense to me, to be perfectly frank. If the U.S. is usually other central banks will want to try to follow trend, but I don't know. So I'm asking for Canadian friends, please share what's going on here. So, and this was kind of a funny title, headline: Loonie at risk of bigger drop as focus shifts to Bank of Canada. Also, too, Wall Street started to change their language. So look at this. Wall Street fears big Fed rate hike after Powell chummed out swinging. And there's one of the sort of fund manager people on Wall Street was like, if they go to 50, who says that they don't go to 75, right? So people are starting to like freak out a bit. Market was down, as you can see. Morgan Stanley, so this is Mike Wilson over there. He's kept the same message all along. And this is sort of how can I say how you can tell the I guess maybe, I don't know, well, I could use the word clown, whatever, the clown for the not clown, but there's some people that will just change their message every day, and you'll see people on YouTube on that. We like, change their narrative of everything every day. But, if you have a certain plan, a certain understanding, and certain things that you look for that make sense, right? Why would you change your narrative every day? The same way Mike Wilson has to change, and I don't really change well. And it's like things look expensive, etc. So he's saying, 20% downside in tech stocks. Overall, the growthier stuff, even the cyclical names that have gone too far, we could have as much as a 20% downside to no problem. And actually moreover too, he said that some could see firms go bankrupt, which would be probably your non-profit, companies that aren't making any profit kind of thing. Moreover, he's saying here, the question is will the markets look through that and suggest that this is temporary and companies will get their head around it, which is we agree with, right? But our experience is that the market will not look through it. And if the earnings degradation is as severe as I think it's going to be, meaning that, when companies start reporting, maybe next quarter. So this quarter, maybe not so bad. Maybe next quarter where companies have earnings reports, it turns out like they're not making that much money anymore, right? Maybe people aren't buying so many iPhones, right? Or maybe, for example, pizza places have to pay workers so much more money to get people to come back to work, and their margins are shrinking. So earnings degradation. That is what's frustrating for some investors who are in the weeds on this. It is obvious what is about to happen. Why is the market taking so long to price this? That is just the way that it is. So people are like, say on this channel, we're like, okay, so why is the market crashing? Why are stocks doing what they're doing? It's kind of weird. And, it doesn't make sense. Like logically, you would think, okay, Fed keep raising rates and now they're getting more scary talk. Why is the market going down? And Wilson's like, well, that's just the way it is. Or as I say, markets be crazy. It's hard to say exactly what's going on, but just looking at, say, software that I use, just for example, this is saying, this is Apple stock saying that Apple is 23% overvalued. So that would fall in line with Wilson's projections, right? You can say, look at this, Tesla is saying 21% overvalued again. It's pretty similar to what Wilson is saying. So I when I see his stuff and I look at stuff that I'm looking at, all seems, roughly about the same idea. Now, however, if you do ask a Wall Street firm, sometimes they'll just tell you to keep buying no matter what. So, for example, Apple stock is a buy. Goldman Sachs says the market is missing something, and they're claiming that Apple has a 32% upside. I don't know. I'm not sure where they're getting at. Because where are people going to get the money to buy said phones, and if they're all getting laid off, right? And this is true though. There has been rumors going around the market that more of these flippy phones are going to be coming out. So theoretically, Apple releases a flippy phone, and we're all like, you know what? I'm not going to buy anything else. Not going to buy clothes. Not going to buy TVs. Nothing else. I'm going to buy the Apple flippy phone. So we'll see if that is indeed the case. And then Citadel's Griffin, this is Kenneth Griffin, sees setup for U.S. recession after traumatic inflation. So that's what's going on around the market. Love to hear your guys' thoughts on any one of these things. Hope you understand. I think there's another day that Powell's going to be speaking, and it'll probably be more fireworks, this kind of stuff. But the message is that they're going to be raising rates higher than people expect, longer than people expect, and there'll be more pain and bumpy ride, all this kind of language. So thanks again for watching, and I'll catch you guys in the next video.